Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into Frontier's second quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Frontier has had an interesting quarter, and I'm excited to break down the numbers and insights from their latest earnings report.
Revenue and profitability overview. Let's start with the top line. Frontier reported a revenue of $1.54 billion for Q2 2025, which is a 4% increase year over year. John, what are the key drivers behind this growth?
Frontier's revenue growth is primarily driven by their fiber-based products, which have seen significant uptake. They added 126,000 fiber broadband customers, contributing to a 20% year-over-year growth in fiber broadband customers. This shift from copper to fiber is a strategic move that's paying off.
And what about profitability? How did they perform on that front?
Frontier delivered an adjusted EBITDA of $607 million, marking an 8.4% increase year-over-year. This was driven by revenue growth and lower content expenses, although it was partially offset by higher customer acquisition costs. However, they did report a net loss of $123 million, which is consistent with the same period last year.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 31 cents for Frontier, but the actual EPS came in at 49 cents. What does this discrepancy tell us, John?
The actual EPS falling short of expectations indicates that while Frontier is making strides in revenue and customer growth, they are still facing challenges in cost management and profitability. The higher-than-expected net loss suggests that expenses, particularly in customer acquisition and capital expenditures, are impacting their bottom line more than anticipated.
Operational efficiencies and future outlook. Frontier has been expanding its fiber network aggressively. They now have 8.5 million fiber passings. How does this position them for future growth?
Expanding their fiber network is crucial for Frontier's long-term strategy. With 8.5 million locations passed, they are well-positioned to capture more market share. The increase in ARPU by 4.9% year-over-year also indicates that they are successfully upselling higher-value services to their customers.
And what about their financial stability and future outlook, especially with the pending acquisition by Verizon?
Frontier's financial position is relatively stable, with no long-term debt maturities until 2027 and a net leverage ratio of 4.9x. The pending acquisition by Verizon is a significant development, and while it adds some uncertainty, it could also provide Frontier with additional resources and market reach.
Key takeaways. To wrap up, Frontier's Q2 2025 results show strong growth in their fiber business, but they still face challenges in achieving profitability. The pending acquisition by Verizon adds an interesting dynamic to their future prospects. John, any final thoughts?
Frontier is on a solid path with their fiber expansion, but they need to manage costs better to improve profitability. The acquisition by Verizon could be a game changer, providing them with more resources to accelerate growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Frontier's performance in the comments below.